Hi there, I'm Dean Heskin, President and CEO of Swiss American Trading. Thank you for tuning into our podcast, The Secret War on Cash. I have with me today my co-host, Chris Agelastos. He is we are going to be talking today about the alliance known as BRICS. And, some of the things that are taking place are going on there. Good morning, Chris. Let's start with that.
Good morning. Good to see you.
Well, very nice to see you as well. So let's talk about BRICS. We ended last year, 2024, with as President-elect Trump won the election. And right out of the chutes, he was pretty vocal and stern, we'll say, towards BRICS and telling them that they better start embracing the U.S. dollar or there's going to be some repercussions or consequences by way of tariffs, et cetera, which is kind of cool in a way to hear your president, putting his foot down that way. However, it's not probably going to be quite as easy as we would want it to be, in so much as that, tariffs by putting those tariffs in place, it's going to create some disruption financially and pain, we'll say, in other areas of our economy, grocery stores, fuel costs, potentially, what have you. But with that being said, so they responded, and we're like, well, we're kind of going to keep doing what we're doing. It was a little bit of a passive response. But now, looking at this first article here, Chris, not only does it look like they're not heeding the warning, let's say, but we have more than 20 countries that are applying to join BRICS in 2025. That's a lot of countries, 20 countries, especially considering BRICS is called BRICS because it, was reflective or representative of the five nations that started it. And we had certainly several who joined the alliance, if you will, of BRICS in 2024, and now this momentum is continuing in 2025. Now, in these nations, you have, and I used to have them right up here in front of me. There are 20 countries. Who was this, Chris? We had Bangladesh, Cambodia, Chad, Colombia, and people would say, okay, well, these are not powerhouses, economic or financial powerhouses in the world economy.
Right.
And there's some truth to that. However, they do control a lot of resources. And the thing is that, if you look at BRICS, it's kind of, to me anyways, they're kind of like their own little war chest that just keeps getting bigger and bigger.
Yeah.
So, is this something, do you see this slowing down in 2025 in your opinion, or do you think this is going to just continue the same way it was last year?
No, it's, if anything, it's speeding up. And I know that, you mentioned some of the countries on there, people might hear, Pakistan, Nicaragua, Venezuela, Kuwait, right? Colombia, Honduras. Well, those aren't individually large enough of a nation to necessarily affect us negatively, right? But when you add it all up together, I think it's actually a lot worse than having one or two big countries push against your currency. And what I mean by that is, if this was one big nation, let's say it was just China that we were arguing with here, we could make some sort of arrangement with them and maybe plug that leak. But I look at this like a boat. Instead of having one big leak that we can focus on plugging, we've got 20, 30, 40 small leaks. And you only have so much manpower and resources to be able to identify and isolate those individual problems. And so I think this is something that unfortunately has sort of snuck up on us. And now that we're aware of it, and it's continuing to go and to grow, I'm not sure that we're really going to be able to have much of an effect. We can talk big words and make some threats and maybe, slow things a little bit. But as far as stopping it, I just think it's too little too late.
Yeah. And, it not only you're talking about what it's doing to the dollar and, international trade and what have you, but when you think, okay, well, maybe BRICS does back off a little bit and, the dollar does rebound a little bit, which would be very ideal. Mm-hmm. But every time I start trying to be positive or optimistic about it, I quickly will reflect on all the debt that we carry in this country that is ballooning right now, and that is going to play a factor in this equation. We are, it'd be one thing if we had our debt at least wise somewhat under control, or our house in order. These threats or these discussions that we're having with them might carry a little better weight, but
yeah,
so much as that we are in a very compromised state right now. That's really where my concern is, because they have good reason to not really want to be getting further or deeper into the U.S. dollar. So,
yeah,
with that said, potential problems on the horizon. Let's talk about some good news. We have yet another analyst who's now talking about gold prices going over $3,200 an ounce. Gold is targeting a solid $3,200 price spot when it can claim it. And I'll let you talk about this a little bit, because here's the thing. It's a great asset. Gold and silver is a great asset class to be diversified into, because it gives you tangibility. It's not a debt encumbered asset. It's been around since, the good Lord himself took the time and trouble to put it in the ground, and it's been of value ever since we started taking it out. So it has been everything that you want in terms of a stable asset. Not necessarily, it goes up and down, but stable just in so much as that it's always there for you. But it does have the benefit over the last several years of being literally one of the single best performing asset classes out there. So
yeah.
Is this $3,200 price range realistic? Is this something that we could expect or should expect to see this year?
Yeah, very, very realistic and reasonable. In fact, you'd be hard pressed to find many analysts that would predict something less than 2,900, 2,950. So 3,200 actually is very reasonable. And this is what we saw last year. The metal prices consolidated, and after about a 3-month consolidation period, shot up over 19%. And that's what they're expecting to happen here. Over the last few months, we've been hovering in this 2650 range, up and down $50. And people have been coming into the market and getting out. And we've built a very strong floor at that level. And so another 19% increase this year would take us to 3,200. And like I said, nearly all of the analysts out there that are speaking on this are predicting 3,000 to 3,400 an ounce. So 3,200 is right in that sweet spot. And I don't expect any trouble hitting that, especially with the administration change, inflation, the issues with BRICS, continuing conflicts in the world. Nothing is really slowing down. So I don't see gold prices slowing either.
I agree. Well, for those people who are tuned in, Chris, what can they do? How can they learn more about gold and get involved in gold? What do they need to do?
Reach out to us. Probably one of the easiest ways is by telephone, either 1-800-289-2646, or text us at that number. If it's easier for you to text, I know that's how I communicate a lot these days. Just send us a message requesting information. We'll find out where you want us to send it, and we'll put together a nice packet for you, or email you materials as well. You can also go to the website if you want to look around a little bit. We have a lot of reports that are educational in nature that will kind of help you walk before you run. We're big on making sure that this is a good fit for you. You can request info there at www.swissamerica.com, and we'll get something off to you, answer any questions you have, and help you however we can.
Well, fantastic. There you go, folks. Thank you so much, Chris. And I have a feeling we're going to see a good little run out of gold this year. Can't wait. Looking forward to it. And if you're not positioned in gold right now, get it done as soon as you can, because you want to take advantage of the same opportunity we talked about at the beginning of last year when we had gold at 2,000 and finished the year over 2,600 an ounce. So don't miss out on this, not only opportunity to take advantage of some profit, but get yourself diversified into something that is tangible. So thanks for tuning in. If you're not subscribed, please do so. And until next time, have a great rest of your week. Thank you so much.
Okay. Take care.